Is this SUD Life Guarantee Royal plan a reliable choice for conservative savers, or does it fall short when compared to other market linked options available in the market? Let us find out through an in-depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this policy, let us first understand a few basic details about it. So, this is a non-linked, non-participating individual savings plan, and some of the key features of the policy are there are flexible premium payments and policy term options available, and a guaranteed lump sum benefit at the end of the policy term as well, and maturity loyalty additions upon policy maturity is available, and higher premium leads to a higher sum assured at maturity. So, increasing maturity and death benefits through guaranteed additions. So, these are some of the key features of the policy, and there are benefits like maturity benefit, guaranteed additions, maturity loyalty additions, and death benefit. So, these are some of the benefits available, and some of the advantages are women enjoy a 5% discount on the first year's premium. Online policies offer a higher sum assured at maturity, and riders can be added to enhance the base policy, and loans up to 70% of the surrender value can be availed. However, some of the disadvantages are the policy term and premium payment term are fixed. The returns may not be compared to other options. So these are some drawbacks that you need to keep in your mind before deciding to invest in this policy. Now, as we have a basic understanding about this policy, let us move on to the IRR analysis, where we can make some analysis to help us understand a more informed decision. But if you do want to know more about certain aspects of the policy in detail, you can refer to the policy brochure. So here let us analyze the internal rate of return using the benefit illustration from the policy brochure. So let us assume for calculation purpose that a 35-year-old male has chosen this policy with a sum assured of 31.50 lakhs. The policy term is 20 years with a 7-year premium payment term and an annual premium of 3 lakhs. In this case, the maturity benefit are as follows, which is sum assured on maturity is 25.45 lakh, accrued guaranteed additions is 21.60 lakh. So the maturity loyalty addition is 6 lakhs. So this results in a total maturity benefit of 53.05 lakhs, yielding an IRR of 5.57% as per the policy's maturity calculator. So given the 20-year policy term, this rate of return is not ideal for long-term investment, as inflation will erode the value of these returns over time, making it harder to meet the rising cost of your financial goals. Additionally, the insurance coverage provided is insufficient. In conclusion, while the guaranteed benefits may seem attractive, the moderate returns and the inadequate sum assured in this policy makes it less favorable for long-term financial growth. So now, as we know that this policy is not giving us the desirable outcome that we need, which is inflation beating return, let us now compare and comparative analysis, where we are going to split the same premium we use for the SUD policy and invest in insurance and investments separately in this alternative strategy instead of investing in a combination of insurance and investment policy like the SUD policy. So here we will allocate 17,800 rupees for life coverage with a pure term life insurance policy offering a sum assured of 50 lakhs, which matches the sum assured on additions from the previous example, which is the SUD policy. So here the policy term is 20 years with a premium payment term of 7 years. So that leaves us with 2.82 lakhs from the 3 lakh premium available for investment. So this investment can be tailored based on your risk profile. If you are a high risk investor, you might lean towards equity investment, while more conservative investors may prefer debt instrument. But in this case, as we are going to invest for a long term period like 20 years, we have chosen an equity mutual fund scheme because it has better potential for great returns in a long term period. So at maturity, the equity mutual fund investment grows to a pre-tax value of 1.39 crores. After accounting for capital gains tax, the post-tax value comes to 1.24 crores. The combined return from the equity mutual fund and pure term life insurance policy gives you an IRR of 10.89%, which is the post-tax return. And if you do want to know how we have calculated tax for equity mutual fund, we do have presented a small tabular column for that purpose for your easy reference, which you can pause and see. So this return substantially outperforms inflation. This comparison clearly shows that bundling insurance and investment as in the policy leads to moderate returns. On the other hand, separating insurance and investment delivers higher returns and adequate life coverage, keeping you on track to meet your financial goals. Then, what is the final verdict? Is investing in the SUD Life Guarantee Royal Plan worth it or not? So, this policy allows for systematic savings while offering guaranteed benefits and protection against unforeseen life events. However, the guaranteed benefits may not be sufficient to meet the rising cost of your financial goals. Additionally, the coverage provided is limited and might fall short of your needs, and it also has a high agent commission. The IRR analysis shows that the savings accumulated under this plan fails to grow into a substantial corpus due to the overwhelming returns. This reinforces the fact that the policy does not effectively address either life coverage or investment objectives. So avoid being swayed by the allure of guaranteed returns to truly meet your financial goals. It is crucial to choose a right products based on your specific objectives, risk tolerance, and time horizon. For life insurance, pure term policies offer higher coverage at a lower premium, providing solid protection for your loved ones.
You can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.